Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of March 4th, 2013. Hello, I'm John Thomas from Primary Residential Mortgage here to give you your update. Well, last week we saw Delaware mortgage rates were finally able to move lower after a big, long run, slow run up from the beginning of the year. Now, if you look at the bond chart on the screen, you can see that on Monday we had this big rally in the bond market, the big, huge green candle up. That had the big candle run up in bonds is good news. That helped mortgage rates move lower, and then you can see the trend for the week has been to slightly move higher from there. Now the problem has been we're capped at this 200-day moving average you can see on the screen. We have failed to break above that all last week, so that's capping mortgage bonds, which is capping interest rates from moving lower. Because of that, we're going to recommend locking your Delaware mortgage rate if you're closing in the next 30 days, because the risk is that mortgage bonds get turned lower, resume the trend lower, which will keep home loan rates moving higher. So we're going to recommend locking in your Delaware mortgage rate here, take advantage of the dip lower in rates, and lock it in. Last week, some big news. The sequester was the big headline of financial news. The sequester is $85 billion of automatic spending cuts that went into effect midnight March 1st, 2013. These spending cuts were part of a program to deal with the national deficit that were hammered out in 2011. This is not a doomsday effect on people. You're not going to notice a big difference when you go to work on Monday. Some people in Congress have been trying to use some scare tactics to make us think some doomsday event's going to happen because we didn't do the sequester. The sad fact is we as the United States spend more money than we bring in as revenue. We have $16.4 trillion deficit of debt that's going on. We need to stop spending and pay down the debt. That means we have to cut programs. There's no way around it. There's been some misleading information from Congress. For example, Maxine Waters, one of the congressmen, put out just a stupid statistic in her speech last week. She said if the sequester goes through, which it did, we would lose 170 million jobs. Problem with that, sounds like a big scary number, is there's only 150 million jobs in the United States. So she's saying everyone has a job. We're not going to have jobs. Everyone's out of work next week, and 40 million jobs that don't even exist will be gone as well. So just a crazy number. It just shows you how stupid people in Congress are. They're supposed to be fixing this problem. They don't even understand the problem to fix it, so that's why we have this problem continuing. In the national news, we also saw Bernanke, the federal chairman, testify before Congress, and he said some bond-friendly things which helped mortgage rates stay lower last week. The first one is he said that the Fed's bond-buying program of buying mortgage bonds to keep interest rates low will continue until unemployment numbers move lower. The second thing he said, which is definitely helpful, is he said that the Fed does not need to sell the bonds they've already bought or the treasuries. They can keep them on the book till maturity. That is great news for bonds because bond buyers have been scared that the Feds dump all this stuff that's on their books into the market. It'll flood the market, drive prices down, and interest rates will spike up. So the good news is the Feds can hold this stuff and they have no reason to sell it. We also saw a read on gross domestic product, GDP, for the fourth quarter of 2012. Came in disappointingly low at 0.1%. If you see the chart on the screen there, you can see Q4 of 2009, 2010, 2011. GDP was way better than it was in Q4. Some people are looking for Q1 of 2013 to rebound. So if that happens, that shows the economy is on the right track. If we get another bad read on GDP, that would be bad for the stock market, which would actually help the bond market. Some other news, we saw some good news on housing. The Case-Shilling 20-City Home Price Index showed that a year-over-year 6.8% improvement, and from November to December we saw an increase of 0.2%. We also saw new home sales showed a very strong January, and consumer confidence for February improved slightly as well. Both of those beating expectations. And we also saw good news from initial jobless claims on Thursday. They came in 20,000 lower than predicted. They came in at 344, but was expected at 360. So that is good news for the labor market. In the local news, the next free first-time homebuyer seminar in Newark is Saturday, March 16th. And that is at the Christiana Hilton Hotel, and that is from 10 a.m. to noon. The next one in Dover is Tuesday, March 19th, and that is at the Dover Sheraton, and that is from 6:30 p.m. to 8:30 p.m. If you'd like to register for either one of those events, you can give us a call in the office at 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.